Welcome to the deep dive. Today we're looking at a phrase you hear everywhere, really. Sports, business, self-help. Trust the process.
It's everywhere.
And it sounds so straightforward, doesn't it? Like just stick with it, do the thing, and it'll all work out.
Yeah, it seems like simple wisdom. But as we're going to dig into today, that mantra, it's definitely a double-edged sword,
Right?
especially in really high-stakes areas like trading.
Mm.
It's meaning, well, it's entirely defined by the user's action or, and this is crucial, their inaction.
That's the core of it, isn't it? So our mission for this deep dive is really to pull apart that difference. The difference between, genuinely trusting a solid, tested process versus just kind of passively hoping things turn out okay.
Because it can be dangerous. Our source calls it one of the most powerful yet dangerous mantras out there.
And that source, it's a really sharp piece called trusttheprocess.pdf, put together by Sir Margin at Camo Solutions PDA. Gives a very unfiltered look at this.
It really does. A unique perspective.
So let's get into that danger zone first. How can something that sounds so positive, so encouraging, actually be harmful? The Force calls it the comfort zone of failure, a seductive trap. How does that work?
Well, the document sort of flips the script straight away. Used negatively, trust the process just becomes a cover for, doing nothing. It's pure passivity.
Like just waiting around.
Exactly, waiting for success to happen to you. Maybe because you read a book once or you backtested something ages ago. It's the subtle hope that the market or, life, your job, whatever, that it'll just bend to your will without you putting in that daily grind.
So it becomes an excuse, maybe? I've definitely heard people say things like, yeah, my strategy hasn't worked for 6 months, but hey, got to trust the process. Is that the kind of thing we're talking about?
Spot on. That's the perfect example. It becomes a shield against accountability.
Wait.
You're just ignoring that maybe, just maybe, the process itself is broken. You're not questioning it. You're trusting some vague idea of a process, not the actual potentially flawed thing you're doing.
And if you're stuck in that mode, I guess you're probably skipping the hard stuff. What does the document say about the tedious, non-negotiable tasks that get missed?
Oh, yeah, the real work, like daily pre-market analysis, meticulously journaling every single trade, the wins and the losses, weekly reviews of your actual metrics, constant study.
Non-glamorous bits.
Exactly. And this negative trust the process mindset, it just gives you permission to skip all that. It leads to something the document calls spiritual bypassing.
Spiritual bypassing. That sounds interesting in a trading context. Tell me more about that.
Yeah, it's using a mindset mantra to avoid the practical, gritty work of execution and refinement. It's like believing the right vibe or the right mindset is enough, that it'll just magically bring profits, without the actual sweat equity. You're using the phrase to dodge the hard yards.
Wow. Okay, so it's not just lazy, it's actively detrimental. The author calls this version a death sentence for a trading career.
Pretty stark, yeah.
And the antithesis of urgency, that really hits home. I mean, I've definitely done that with, say, fitness goals. Trust the process sometimes just meant hope something happens while I scroll on my phone at the gym.
We've all been there, probably.
Yeah. So for you listening, maybe take a second. Where in your life, your work, might you be doing that? Using trust the process as a bit of a shield, an excuse for not quite digging in.
It's a good question to ask.
But okay, let's flip the coin. There's a powerful positive side, right? If that's the dangerous edge, how does the same phrase become, as the source puts it, the engine of growth? How does it become this act of faith?
Absolutely. When it's used right, trust the process is all about discipline. Discipline over emotion.
Okay.
It means you're trusting your actual predefined trading plan, your entry rules, your exits, your risk parameters. You stick to them, especially when fear or greed is yelling at you to do something else.
So it's about fighting those impulses.
Exactly. The belief is that over the long haul, executing your plan, your edge, flawlessly, that's what gets results. Even if one trade doesn't work out, you stick to the system.
So it's really about that consistent execution then, not trying to hit home runs every time.
Precisely. The document stresses that profitability comes from repeating high-probability actions consistently, not chasing every shiny new thing or trying to perfectly predict the market swings.
Which sounds impossible anyway.
Right. It's about doing the work, taking the valid setups, managing your risk every single time. That repetition, that consistency, that's where the power is.
And crucially, this isn't just blind faith, is it? It's not crossing your fingers and hoping.
Not at all. This is confidence in a statistical edge. And that confidence is earned through rigorous backtesting and forward testing.
So you actually have the numbers.
You know your numbers, your strategy's win rate, your profit factor, average win versus average loss. The source is really clear. You trust the process because you have data that says, hey, if I do this 100 times, the odds are in my favor. You're trusting the math, the evidence, not just, hope.
Which must be incredibly important when things inevitably go sideways for a bit.
Yeah.
We all hit those rough patches, those drawdowns the document mentioned.
Oh, it's absolutely vital. This active trust, this earned trust, is what gives you resilience during drawdowns.
Gets you from panicking.
Exactly. Every system has losing streaks. This trust prevents you from blowing up your strategy just because you hit one. You don't just ditch a proven plan after a few losses. You rely on your data, your history, and you trust the statistics will eventually, normalize. You stay the course.
That's such a clear distinction. Active earned trust versus passive hope. So for you listening again, what kind of data or rigorous testing could you apply in your own field? Your job, a project, learning something new. How could you build that informed, active confidence in your process?
Makes you think, doesn't it?
Definitely. Okay, so we've seen the two edges of the sword, the danger, the power. But let's really get to the heart of it. What does trust the process, when it's working, truly embodying? The author gives a personal definition that's really potent. The disciplined execution of a statistically validated plan fueled by relentless preparation and reviewed with brutal honesty.
Yeah, and notice that key phrase, active verb, not a passive state.
It's something you do.
And the author describes it as this whole ecosystem of success. It's not just one thing like the trading strategy. It's everything around it. It all starts with the preparation process.
And listening to the description, this preparation sounds, well, intense doesn't quite cover it. It's not just glancing at headlines.
Oh, not even close. It's a massive commitment. Waking up early or staying up all night studying, really digging into different approaches, even bringing in ideas from psychology, philosophy, anything for an edge. Understanding the fundamentals of the assets. Scanning, filtering, planning trades based on both the micro and macro outlook. So looking at the immediate picture and the big long-term economic trends, it's deep work.
Seriously thorough. Okay, so you've done that incredible prep. Then comes the execution process. What does that look like?
Strict adherence. That's the key. Entering, managing, and exiting trades exactly as indicated by the market with no deviation.
No wiggle room.
Basically, no. And a huge rule the author emphasizes, don't argue with the market. If the market signals it's time to get out, you get out, period. No ego, no second guessing. Just follow the plan.
Makes sense. And tied right into that is the risk management process.
Yeah.
The author's definition of risk here seems broader than just money.
It is. Money is obviously a risk, a necessary one. But the author defines the real risk, or maybe the unnecessary risk, as time and attention spent on a trade.
Interesting.
Yeah, things like attention, emotion, time, anything that pulls focus away from finding the next opportunity, that's opportunity cost.
It's so preserving mental capital.
Precisely. Which leads to a non-negotiable rule. Not making any executions or engaging in trades with low probabilities. Protect your time, protect your focus, protect your emotional energy.
Okay, that all forms a coherent picture. But then we get to the review process. And this is where the author throws a curveball, right? Quite a contrarian view. Most of us think reviewing every trade journaling, asking why did I follow rules, what did I learn, is fundamental. That's how you check if the process you're trusting actually works.
That is the standard advice. And look, it's valuable, especially when you're learning and building your system, no doubt about that.
But the author doesn't do that anymore.
Not in that traditional way, no. Not after their first year, which was focused on analysis. Their core belief now is quite profound. Reviewing your trades is expecting to play the same opponent again, while in trading the opponent is always different.
Okay, unpack that.
They use this great analogy. You cannot step into the same river twice, neither are you the same person, nor is the water the same. The market conditions today are never exactly the same as yesterday. The context changes constantly.
That's a really interesting, maybe slightly confronting perspective. So if you're not reviewing past trades in detail, how do you refine or improve? Especially if you're newer. Wouldn't you need that review to even spot your own mistakes before you can, predict ahead?
That's a fair challenge. And yeah, the implication is that the initial phase does require that analysis to understand your own patterns and the basics. But once that foundation is there, the author's approach shifts dramatically.
Okay.
Instead of backward-looking review, their focus becomes trying to learn to predict few moves ahead using something called the mini-max strategy.
Mini-max, like end games theory.
Kind of, yeah. Estimating probable market moves before acting, thinking, okay, what's the worst thing my opponent could do, and what's my best response given that? It's making decisions assuming the opponent might be superior, like David versus Goliath, always looking for ways to survive the tough spots.
So failure isn't about a specific mistake in the last trade.
For them, no. Failure means simply being inadequate. You were bested by my opponent. The focus shifts entirely to improving yourself for the next unknown challenge, rather than dissecting the last one you already lost. It's forward-looking improvement.
Fascinating. A very high-level, demanding approach. So, for you listening, how does this whole ecosystem apply to you, particularly that provocative idea about review? Who or what is the opponent in your world? And how do you prepare when the river is always changing?
It's a different way to think about improvement.
It really is. So let's tie this all together then. What it seems to boil down to is that the sense of urgency is applied to improving and executing the process, not to the outcome of any single trade. That feels like the crux of it.
Exactly. The urgency isn't about needing to win this trade right now. It's not impatience for results.
Right.
It's about being urgent in your preparation, urgent in your education, urgent in your review sessions, however you define review, and having this disciplined sort of urgent patience in your execution. It's a constant drive to get better at the doing, at the process itself.
Relentlessly refining the how, not just wishing for the what.
You got it.
Okay, that really clarifies things. So final question for you, the listener. Where is your urgency focused? Is it all on the outcome, on getting that result you want? Or are you channeling that energy into the daily, diligent work of improving your process, whatever that might be?
Good place to put the focus.
So wrapping up this deep dive, trust the process. It aims to be that point of calm, right? That calm in the storm of the market. But as we've definitely uncovered today, that calm isn't automatic. You don't just get it by saying the words.
Not at all. The absolute core message from the source is crystal clear. That calm must be earned every day before the market opens through hard work. It's an active daily grind. It's not passive wishing.
Which brings us perfectly to our final provocative thought for you. The source nails it. If you haven't done the work, you are not trusting the process you are hoping. And hope is not a strategy.
Powerful stuff.
It really is. So the challenge to leave you with is this. Where in your life, in your work, are you truly earning that calm through rigorous daily pregame effort? And where, if you're honest, might hope still be dressing up as trust in the process? Lots to think about there. Thanks for joining us on The Deep Dive.